G'day everyone, welcome back to Pete's Investing. Today is March 6th, 2023. This is a spot silver price update. As you can see here, since our last update, the price has bounced off this key support line on the daily, and it's making some very slight advancements. Looking at the 4-hour chart, you can see here there's been a bit of an ABC formation, and it's broken above that previous high, and it's now reached the 78% extension of the Fibonacci, and it may well go a bit higher still, although don't get too cocky about going long at this point, because on the CCI and the daily it's still in a downtrend on the moving average, and the CCI on the 4-hourly is also below its moving average, which is a bearish momentum. On the hourly chart, it has made some slight broken through that moving average, and I've got to emphasize it's very slight bullishness, and I would wait for the 4-hour chart to break to the upside before going long, which if you're trading the hourly chart, and likewise if you're trading the 4-hour chart, probably wait for the daily to make some break above its moving average like it did back in this period. And whenever it does make any advancements, when it's in a shorting position like it is here, just be mindful. For example, at this level here, it did break above this moving average 20, but it's still well below the moving average 400 on the CCI. But if you look at the price chart, it's pretty flat recovery, if you like. In other words, it hasn't really made any major advancements. Now this here as well, likewise as an example, it's broken above its moving average 20, although it's still below the moving average 400. Now it's broken to the downside and breaking up, but again, we want to see that break much higher, converge and close the gap between the moving average and the CCI a lot more before going long. At the moment, if you look at the daily as well, it's in terms of the retracement between that high and that low during that period, it's reaching the 23% retracement, which is a positive, and we'll see how it goes. If it breaks through above that point, we need to see it then advance towards a 38% retracement for further advancements and going long. But again, I would follow the CCI 1500 momentum and see where it's going. At the moment, it's breaking above the hourly, but it's still below the daily and the 4-hourly. To understand how to properly trade using the average down approach, reference the playlist at the end of the video or some links in the description below. Here are some of my investing rules. Buy proven blue chip stocks only, avoid speculative stocks. The reason for that is blue chip stocks have generally got a good history and a good track record, and you want to avoid going speculative because you're not sure where that stock, especially if it hasn't got any history, you want to avoid making just guesses or gambling on potential trades. Buy stocks which pay dividends. The reason for that is if the price goes against you and you're not closing out according to gaining a profit in the short term, at least you're getting some level of income via dividends if the stock price goes against you. Don't short positions, go long only. So again, similar to the blue chip environment, if you're going to go short, you're basically speculating, and if you are going short and you have to pay dividends, the dividends will be paid to those traders that are going long. So that'll be just an extra cost in your trade. And don't trade on news. Price is already factored in the share price. If all the insiders have generally benefited from any inside knowledge of the news, and so by the time it hits the websites or the papers, you're getting late on the bus, so you're going to be missing out on any potential gains. Thanks for watching. Don't forget to click the subscribe and the like button and click the notification bell to get all the updates to the channel. If you want to support the channel, subscribe to the Patreon page. The link is in the description below. Happy investing, and speak to you in the next video.